Bob, if we look at an interesting part of the fixed income market, the so-called inflation-protected market. We already get questions on that particular part of the market relative to our discussion on an inflationary environment with low growth. So what do you make of the TIPS market as a diversifier or as an addition to a portfolio, given your view of high inflation relative to growth here?
Well, first of all, I love that we're having a conversation about TIPS. I mean, it doesn't get any better than talking real interest rates. That's not the sort of usual conversation that folks are thinking about, but it's good because I think let's first just talk about how you think about TIPS, which I think is important, particularly in an inflationary dynamic, because I think a lot of people are sitting here looking at it and they're going, "Wow, break-even inflation is, I don't know, it's basically stuck at 2%, or so close to 2%. And it's not really moving around despite the fact that we're getting this inflationary dynamic. Kind of how can that be?" And the answer is, if you've traded the TIPS market, it's important that to see that there's two ways an inflationary dynamic can resolve itself. The first way is that break-even inflation can rise. And that's certainly one of the ways, and that mostly what you see is nominal yields rise more than you see real interest rates. But the other way it can resolve itself, particularly on the long end, is that if there's expectations of elevated inflationary pressures over a long period of time, the way that can get resolved is the central bank can respond through elevated real interest rates, right? So if you can get that 2% inflation outcome, that basically is being priced in the market as long as real interest rates are held higher for longer, and that's essentially what we're seeing in this market is a real circumstance where real interest rates have risen a lot. The inflationary pressures have led to elevated real interest rates, not really that elevated break evens, and that those real interest rates I think reflect the reality that we probably need higher real rates for longer, and that real rates, let's be honest, at in the mid twos, in 2.25, 250, you're starting to get something that has real value in it, that you might not see in the nominals. Like if I, just for perspective, like the greatest TIPS trade happened right in the middle of the financial crisis, and TIPS were at 325. So, I mean, that gives you a sense as to long dated TIPS were at 325. So, we've gone a long way from where we were in terms of, TIPS being negative yielding to being yielding into the twos. As you get up to the 2.5 range, you start to get very attractive long-term returns coming from those securities.